Good morning, everybody. Welcome to the Trading Market Technicals morning call video for Monday, June 25th. Last week we had a wild ride. Wednesday we had the Fed come out and say really no more stimulus at this time. Markets clearly reversed with a hard sell-off on Thursday, and then we got our low volume bounce on Friday, which really volume was non-existent on Friday. So that really gave you a clue. Hey, you know, we look to sell these rallies, and we talked about that on Friday. We'll get into it a little bit more when we get into the charts. We did have the NASDAQ and the Russell post some gains last week, 0.68% and 0.5%, where the Dow and the S&P actually lost 1% and 0.5%. Not good if you're a bull in this market here. We did have a test of the 20-day moving average. We're sitting above the 20 and below the 50 on the daily charts. Again, we'll get into that as well. A lot of uncertainty still remains. I think there's still a lot of fear. Over the weekend, though, when I was doing a lot of research, I did see a lot of market forecasters still predicting more stimulus in the form of a 3-year LTRO, which is a long-term refinance operations. But that would really come into play a little bit more getting closer to the elections, and we'll see what Bernanke does and where he leans towards, which would be probably the favor of the polls of if Obama's winning or if Romney would be the clear leader here. I'm sure he wants to keep his job. But getting into getting back into the markets here, energy clear lagger for the week as far as a sector perspective. However, we do have crude oil sitting into on a major bottom. So that's going to be interesting to see some oil and some oil stocks if we rally this week. So I'll be keeping an eye on that. The bad news is that we don't want energy to really lead a rally higher. We'd like to see a lot of the consumer discretionary, the banks, and of course technology taking a leadership role here, and of course transportation sector. So clear this week is going to be interesting to see if we can take out last week's high. And I think if we do that on conviction with some higher volume, then I think we can really take a run up to the 14 area. But that is a little bit, right now, a little bit stretched. We want to take that, again, one day at a time. We'd like to see us get back at least above the 50-day moving average, hold there, maybe carve out a little bit of a base, and then move higher 2 or 3 days. That's going to be really the really momentum, if we're going to get some bearish momentum or we're going to get some bullish momentum. And that's going to be really a key what I'm going to be watching here. We do have a lot of economic data coming out today, new home sales coming out at 10 o'clock, so that's something really we need to take note of because that could be a market mover. Let's roll right into the charts here. Now, what I did was I like to do a lot of overlay of some of the world markets. And getting in here, as you can see, here's the Shanghai. Now, Asia, the Shanghai index is really a good indicator, barometer of what other markets are doing. They are buyers, huge buyers of commodities, and when they start getting a hiccup or cold, all the other markets start to follow. And I'll be putting this on a consistent basis, but it's really important. S&P 500, as you can see, we've held really well, as you can see, where all the other markets, the DAX, the French CAC, and the FTSE, all indicating lower here. Now, we did get our bounce, as you can see. Now, this is 200 days worth of data, but look what's happening here. The Asian markets, the Shanghai, is actually headed lower. That's not good. We want to see this market actually take control and start putting a nice reversal here, and then we can say, hey, this is actually pretty decent. This market seems to be acting really well, healthy. This is not what you want to see when you have world markets, world leading markets such as the Shanghai rolling over. So not a really good as far as barometer for the world markets. Don't like to see that. So that's a big red flag for me. On Friday, we did mention, I had a recap in Friday's video. I said, guys, look for a little bit of a pullback, a little bit of a retracement on low volume, and that's what we had. Every time you have a hard sell-off the previous day, you really look for a low volume pullback looking to get short. Now, as for swing traders looking to build a position, I did say let's sell rallies. I think it would be notable here. And if you're day trading, be cautious looking to get short because market is oversold. But if you had a catalyst of some sort of an earnings downgrade or something like that, I think you'd be fine looking to get short the market. But we wouldn't want to get short down here. And look, clear example, we gapped up and we kind of sold off a little bit. Then we went sideways all afternoon, and then we just drifted higher and rallied into the close. Clear example of a Friday, low volume Friday, summer day. So this was just a clear example of what would to happen. Pretty much expected. Where do we go from here? That's the big thing, right? So I want to get into the indicators first before we actually go into the charts. Now, I do favor downside. I do think that we are down this morning pre-market, but I do think that we get some sort of a bounce here. I would like to get a little bit more higher of a bounce before we really getting into some shorts. That doesn't mean that won't be short or long during the day, but for day trades. But as a gauge of the barometer of the market itself, we are still here at these lofty levels. Now, we're not as, this was a clear example when I mentioned on Wednesday night, look for a reversal. We had that big down move. Now, I'd love to see us get back up in here and then fail, and that's where I'd start entering some short positions. Because now today, if we roll over today and we take out Friday's low, then I would say that's another way to get short. Other than that, I like to short into a low volume bounce. If we get some follow through today, that would be great. Again, we are down right now. It's only 5:30 in the morning, but I do think that we can get some sort of a bounce, then fail, and then take out Friday's low. Then I think you got a clear sail down to probably down to the 1300 area. So here we are with the NYMO. I want to look at the U.S. dollar, because the U.S. dollar, we mentioned, had a bullish pennant, bull flag pattern here, and yes, we did get our retracement back, but look what happened. It held here. It really didn't go anywhere. We did trade lower, and then we came back up again. So this is actually a very bullish pattern. And as you know, when we have dollar strength, you're going to have commodities and stock weakness. So that's clear indication to me that I do think that we are going to be headed lower. New York Stock Exchange, Nasdaq Summation Index, still pointing higher though. We really, now this is on this here is a good indicator to have, and this is what I always like to look for. It takes a little time before this thing rolls over. So right now we're still pointing up. So the Nasdaq is still looking higher. Okay. Perfect example is that obviously we had Apple. Apple's a very big weighted in that index, so it's a little bit skewed, but I still like to look at what's happening with the Nasdaq. Let's take a look at the bullish percent of the S&P. Now you can see here's a little different, right? We have a little bit of a hook here, and I like to see this momentum moving average, which is the 8, which I use quite often, and I like to see this crack. When this thing breaks lower, and they start to roll, just like you had up in here in this area, then I think market probably going to be in trouble. And right now, what I'm looking for, maybe a little hook back up again, right into that overbought area, and then look the market roll over. Then I think you're going to have a real nice chance, the opportunity to get short, and we will have an opportunity to get short. Okay, let's take a look at the S&P, the spiders. We'll use that as our proxy because it shows us volume, and I really like to see volume. If you looked at the stochastics are way, way overbought still. They just crossed over on Thursday. Look at what happened with the volume. And I mentioned that volume is very, very important. It is key. Still a key barometer. Look at this on the move up. We are now between 20 and our 50-day moving average. And the volume is really, really low. And look what happened here. We didn't even get to at least 50% of this. It was at 134. Okay, 134, 134, 20 or so, and still didn't even make that move higher. So that was a clear indication. I would imagine smart money probably sold into that short yesterday or on Friday, or lightened up a lot of longs. So this is really important. I think the market's in trouble a little bit, and I think that we're going to see some further downside. And show you the transportation sector. This is a leading index. This is something you do not want to see a doji sitting here. We didn't even break back above the pennant. Now this is really bad. We had a market low as here on Thursday. We couldn't even retrace back half of that move. That is not good. As a matter of fact, we actually gapped lower, and we couldn't even fill that gap to get back up again. So this is I think the market's in trouble. I think having a clear indication of some of these indices. That's why it's important to look at the other indices. I think that we are going to head lower, at least in the near term. We will have our bounces to sell into. IWM, Russell, okay, another one. But they're actually acting well. I did mention the Russell and the Qs, which I'll get next. But as you can see here, we did have a little bit more volume. And again, I think it's kind of skewed, though, looking at the NASDAQ, having Apple being overly weighted in that index. So it kind of gives you a false little pretense when you're looking at, when you're looking at these ETFs. Now, this is the Russell, so this is not the Qs, but you'll see what I mean going into the next chart segment. But again, oversold. MACDs haven't really kind of crossed over yet. But if you looked at when we were back here, look at what happened here. We had a market move lower and we ran up high. But look where we were. We were over the zero line, okay? If you look at this indicator, this will give you an example how much stronger we were here, okay? Now, when we sold off here, we never really got back above the zero line, okay? And look where we are from where we were here. So this is not a good sign. This does not tell me that we're in a healthy market. Qs. Now, the Qs, a little different, again, because of, you can see, a little different because of what Apple's are overly weighted. And technology has been doing much better, actually. But, again, oversold. MACDs really haven't even got above the zero line here where we were above the zero line all the way up in this large move higher. So this is not good. This is not what you want to see moving forward. And our diamonds. And our diamonds chart, let me just bring that over. Again, look at the Dow Jones. Again, the industrials not doing well at all. So this is something that is a big red flag for us. How do we trade it? The big question is. Well, I'd like to see if we're going to take out, if we're going to move higher, I want to see heavier volume, and I want to see us take out last week's high. If we fail to do that this week, I would imagine that the markets will be headed lower. Now, we don't assume anything as far as our trading. We let the market, we let the charts and our internals tell us which way we're headed. And as far as the market's concerned, and then we make our move and we trade accordingly to our plan. So as of today, we are down this morning. I want to see a little bit of a rally, and then we'll look to sell this rally today, moving into tomorrow. Okay. All right, guys. Have a great day, and we'll look forward to getting another commentary out first thing in the morning. Have a great day, everybody.